Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined today by Ian Foster of beawinning.trader.com. How are you today, Ian?
Not too bad indeed, thank you, Matt. Thank you.
Well, thank you very much for coming on. We're doing two videos, so this is the first of two. But before we get going, just talk about beawinning.trader.com, what it is and what you do there.
Well, Be a Winning Trader is a company that, that I started up. I started doing financial trading seminars in 1998. So in other words, everything that Be a Winning Trader is about is actually teaching other wannabe traders how to successfully trade the markets.
Fantastic. And you brought along a few slides today to look at. We're going to focus in on the indices first off in this video, and we're looking at the FTSE 100 weekly chart. So just talk us through what you're seeing here.
Well, again, everything that we do in Be a Winning Trader is based first and foremost in price action. When I first learned price action, and we many years ago, it wasn't the in word, so to speak. Everything now, every analyst you probably, I bet that you've probably interviewed, it's price action as far as the technical analysis side of trading is concerned. So it's based on price. And it's very, very good because if you're basing trading decisions on price, it means that you're letting the price dictate, or you should be letting the price dictate of what particular direction and what decision you should be making in relation to your trading outlook for that particular instrument. So again, looking at the FTSE here, on a technical basis, on a fundamental basis, the FTSE actually, would you believe, the wide market of the UK market, not just the FTSE 100, but analysing a couple of thousand stocks, is actually quite strong as we speak. But that can very quickly, as you know, turn around. And I know there's been a couple of surprises recently in the last couple of days with a couple of key stocks down quite heavily, although the FTSE is trading a little bit up this morning. But from a technical analysis point of view, what I want to point out here, and this is why I've shown the weekly chart, if you look at the last couple of bars to the right, now these are the open, high, low, close charts, and you can see that we about 2 weeks ago, the most recent bar there is actually this present trading week. But 2 weeks ago we had a very bearish bar. That's what we call, on a price action basis, an outside vertical bar. In other words, at a higher high and at a lower low.
Yes.
Therefore, technically speaking, that low should be broken, and it hasn't yet been broken. It's attempted. Last week we're trading inside it, and it actually gives quite good intra-week trading signals, in as much as that if you see a rally and you start to see it coming off, well, perhaps it's now going to achieve its weekly price action objective. It hasn't done that. So think from a technical analysis point of view, in the FTSE very much so, you can see there's massive strength there at the 72.91, 72.93, around the 7,300. So I would say 72.90, 7,300 level in the FTSE. If we break that there, it will certainly come down to the next previous low, which would be certainly 200 or 300 points at the very least lower. But at this stage, it's holding up, and as I say, fundamentally, it's looking generally the wide market strong, but technically, it's certainly, I would be more inclined to be looking for any rallies. I'd be looking to sell in the FTSE.
Understood. And moving on to the DAX, the sometimes widowmaker.
Yeah, well, the DAX has been quite a bit weaker. The weekly price structure on the DAX is slightly different than the FTSE, but still, again, you have that very bearish weekly bar of 2 weeks ago, and the high of that bar is 12,337. And very much the low of it, as I've marked on the chart there, is 11,919. Now, so far, even last week, the early part of last week, there was quite a strong rally. And the DAX couldn't come up, and it couldn't take out the 12,337. And what did it do? It shot down quite heavily, but it didn't. It wasn't still able to break the 11,919. So again, on the DAX, I'm saying until such times as 12,337 would be taken out to the upside, I would still be looking for short signals on the DAX with the objective of taking out 11,919. That is on a very much a technical analysis point of view.
Fantastic. So bearish on the DAX, and then moving on to the Dow, onwards and upwards.
Well, you can see, look at the Dow. Look, I mean, I've put in what we call our vertical bar trading pattern highs and lows. Others may call them swing highs and lows. We have quite a defined way of defining when a swing high and swing low, and I've just marked them there. And you can see where we are in the weekly chart in the DAX. Again, we've seen technically weakness, more weakness in the FTSE.
Yes.
We've seen weakness in the DAX. But look where we are still in the Dow. Every time the Dow attempts to go down, you think, this is it, this is going to be the correction. And I think it actually would only be good for the market if there was a correction, because sometimes
it'd be healthy.
It'd be healthy. Yeah. If you continue up, you know, and anything, it's like climbing to the top of a tree. At the very top of that tree, it gets pretty shaky, you know. But if you're actually able to build foundations underneath that, and this is what I'm saying. So I mean, last week, come the sell and everything was down a couple of 100 points. This is it. It's going to continue. What did it do?
Next day, you know,
we're back up, and but again, there's the level. If it would retrace here, that 21,169, which is a previous high, which was at one stage a resistance level, that should be support now. Again, if we come down to that level, which I know 600-700 points lower, I think that would actually be healthy for the market, be healthy for all the markets. So again, you know, we've a pattern on the Dow. The Dow fundamentally, actually, in comparison to the FTSE, is actually more of a very 50-50 scenario. So looking at the broad American market, taking into consideration the likes of the S&P and the Nasdaq, etc., the broad market is actually very much in a 50-50 compared to the likes of the FTSE. That seems to be fundamentally stronger at this minute in time. But technically then, it's actually given a slightly different signal. So again, what would I be looking? I would be looking at the Dow at this minute in time. I would still be liking to see the 21 or to fall down to closer to those levels. Now, the key level, which I have written on the chart there, is 22,085. Now, if that is broken to the upside in the Dow, I think we're going on again, up northwards.
Gangbusters on the Dow.
Yeah.
And just finally, you have a webinar tonight.
Yeah, we have a free webinar tonight. We do free webinars on a regular basis. It gives an opportunity for people to see actually what we do, what our methodologies are, using our we have a unique trading tool, a piece of software that I've personally developed, and we show that in real different charts and different time frames. And again, it's totally free. It gives people an insight to see how they can become a winning trader.
Fantastic. On that note,
sorry. Just to say, it is at 7:30 p.m. tonight, and if you wish to sign up, it's freewebinar.beawinningtrader.com.
Fantastic. Well, viewers, please check that out. Ian, thank you very much for joining us today.
Pleasure.